It is estimated that 500,000 people and growing, 500 million people and growing in Africa are without electricity and at risk of being left behind, on energy access in sub-Sahara, right? Despite notable efforts being made by many institutions, and we're going to hear from some of them today, in terms of off-grid solar sector, efforts are focused on the few lower risk markets. So, in terms of the higher risk markets, a great deal has not been done, and in the success that we have seen in some of the more, easier markets, it has not been replicated. Energy access is linked to both mitigation and adaptation, and providing access to reliable energy builds both resilience, adaptive capacity, towards a low emission development pathway. In this session, we will discuss three key areas. The first is what is the status of the off-grid solar market serving the last mile customers? Secondly, how have off-solar energy companies overcome challenges in these more difficult markets? And lastly, what is needed to accelerate a just and inclusive energy systems transition? I am delighted to be joined on stage by four panelists. First, Jacqueline Novogratz, who's the founder and CEO for Acumen Fund, and she'll be sharing very granular insights into some of their experiences and challenges in the market. Secondly, David Thompson, acting coordinator, USAID and Power Africa. Third, Bruce Wu, who's the MD for Shinan Bank for EMEA region. And lastly, Ron Fendi, who's the CFO, Delight Design. My name is Soji. I'm the Deputy Director for the private sector at GCF, and I'll be moderating this session. So in terms of how we're going to run a play, I'm going to ask the panel a number of questions, which they'll answer and provide insights to. But beyond that, towards the end, we'll have a few minutes for the audience to provide questions that you may have. Unfortunately, depending on time, there might not be too many questions, but at least maybe at least one or two questions from the audience, right? So in terms of the first question, I'll sit down with the panel now. So in terms of the first question for the panel, right? How has the off-grid energy sector evolved over the last 5 to 7 years, and what are the major constraints hindering those that are hardest to reach? I'm going to ask David, then Bruce, then Ron, and then Jacqueline, who will ask last. Thank you.
Well, first, thank you very much. It's so great to be here with our excellent partners and collaborators, including our long-term partners, Acumen and Delight. Jacqueline, I want to congratulate you for the work that you've done over the last 20 years and expanding financing for harder to reach markets. And Ron, I also want to congratulate Delight for reaching 150 million lives throughout the world. So that's really an amazing milestone. Congratulations. And I also want to thank our hosts here today for convening this panel. So if I could just say, over the last 20 years or so, the market for off-grid has evolved in a number of ways, and we've seen incredible growth in the availability of real commercial capital. And I don't want to steal your thunder, Ron, but if I could just highlight from Delight, as recently as 2016, Delight received a grant from USAID to expand its work in Kenya and Uganda. And we fast forward a few years to 2020, and Delight is raising its first ever off-balance sheet financing vehicle, Brighter Life Kenya, to allow the company to receive its accounts receivables to expand solar home systems in Kenya to finance continued growth. and we provided legal structuring support to that facility. And so that vehicle raised about $65 million, including $20 million from the United States Development Finance Corporation, which was very instrumental. So I say that there has been growth and opportunity. However, including in the last 10 years, $3.1 billion in new equity debt and grants to the off-grid sector. But the thing that continues to constrain us is how to translate that opportunity from the best markets, the least risky markets, Kenya, Nigeria, and elsewhere, to those less served, those countries and those communities where the risk is perceived, at least, to be greater. However, it's usually those countries and communities where the impact of climate change is being felt disproportionately. So great progress, but the trick is, how do we continue to work together to expand the opportunity for those less served markets? Thank you.
First of all, let me introduce my company, Shinhan Bank, for your better understanding. Actually, Shinhan Bank already committed to invest in hard-to-reach fund as a senior investor for 20 million US dollars. Shinhan Bank is one of the largest banks in Korea, and Shinhan Bank is owned by Shinhan Group. Shinhan Group has a lot of subsidiaries, insurance company, asset management company, capital, credit card, and so on. And its asset size is exceeded 500 billion US dollars in total in asset. And actually, Shinhan has been actively investing in solar energy sector in Korea and globally. And recently, we learned about off-grid solar sector in Africa. Actually, we have invested in the solar sector through our participation in Beyond the Natural Fund with General Atlantic. So we have invested in Sun King indirectly through the fund. We saw the growth potential of the energy access sector in Africa. But Africa is a little bit far away and to do business, we know that. But anyway, at the time, and then we met Acumen's hardest reach fund. So, although I understand the challenges of managing the cash flow for the companies, but we believe, hard reach can help the companies, providing the companies with some of the scale of the businesses, and help them, orienting toward the more impact. Yeah.
Okay, thanks, Bruce, and good afternoon all. As I've been introduced, my name is Ron Fende. I'm the CFO for the Delight Group. Now, the problem of speaking last is everyone steals your thunder, up front. So, David spoke about some of the highlights I wanted to give. But, just taking maybe a little bit of a step back and talk about our journey, from a Delight perspective on off-grid, an off-grid solar company. And we look at the journey definitely sort of over the last 5 to 7 years. It's been a time of tremendous growth in the off-grid sector. As David said, when you're looking at 2016, we're looking out for things like grant funding and that type of thing, or some kind of subsidized funding. But I think one of the biggest change is the sector has grown enough that there is now confidence that we can actually attract some commercial funding. And I use the word some commercial. There's still a long way to go, but at least there is some credibility that we've managed to get in that regard. I think the second change, and again, I speak from a D-Light perspective, is, we can't talk about the last 5 years without talking about COVID, right? Now, COVID was both good and bad, but I think the good for us is that it then forced people to relook at the product offering, because wherever you were, even if you're in a successful market, people's incomes were impacted, affordability was impacted. So one had to relook at your product range and say, how do I give access and keep it affordable? And sometimes they say, necessities, necessity is the mother of invention. So I think you'll find, if you look at D-Light, even if you look at our competitors, there has been quite a lot of product innovation that has come up in the last few years that provides lower cost products for the same functionality. So if you look at those two pillars, and I look at the sector from those two pillars, you look at the product, you're getting lower price product. Secondly, the sector is now gaining credibility in terms of access to finance. And I think those two are probably the great foundation for companies to start looking at the hardest to reach, because those are the two things that normally matter when you're looking at hardest to reach communities.
Thanks. I'm Jacqueline Novogratz of Acumen, and I actually think one of the big changes that have been made over the last 5 to 7 years is made manifest by this group of partners sitting here, where you're looking at different entities willing to go to some of the most vulnerable, poorest markets in Africa. And you've got the company, which these are hard companies to build. You've got a commercial bank. You've got a government entity that has provided critical grants already. And you've got the Green Climate Fund for climate financing in very concessionary ways. This didn't exist 5 years ago, and I just feel so thrilled and grateful for it. And I'm looking over here at Alex Tour, who is the founder of Easy Solar, which is doing this work in Sierra Leone and Liberia. And so already in very complex markets, we have learned so much. Really picking up what my colleagues have said, we've seen over the last 5 to 7 years growing sophistication, growing capital, a deeper understanding of even who the customer is. And so you're starting to see better systems for analyzing creditworthiness of the consumers, as well as collection. A lot of good news. This group, really good news. On the other side, we're looking at real headwinds in the world. Just look at Kenya and Nigeria, 40% devaluation and a 70% devaluation of currency. This sector has operated primarily in dollar-denominated debt financing. And so we've seen literally millions of dollars wiped out of balance sheets from companies that are operating at very, very thin margins. And so what I'm looking forward to proactively is, we're now at the conversation stage, although D-Light and Sun King and a few others are really innovating here, off-balance sheet financing, receivables financing, ways to provide guarantees and other instruments to enable local banks to lend in local currency, because that is going to be so critical to how we actually build these markets in country, in very fragile places, to make real change.
Excellent. Thanks for those insights. I think it's been really good to engage with you, but I'd like us to get a little bit deeper, and I'll ask some more specific questions to yourself, David. From a USAID Power Africa perspective, over the last decade, Power Africa has demonstrated how collaboration between public and private sectors can unlock economic and energy potential in sub-Saharan Africa. could you share with us how Power Africa has engaged with both public and private sectors to promote access to energy, especially for those that are hardest to reach?
Thank you very much for the question. So since the start of Power Africa 10 years ago, we have helped in some way facilitate about 15 million off-grid connections. So as much as we'd like to celebrate that, we look at the overall numbers, and we also look, if we broke down those numbers, we'd also see that probably, I don't have the numbers broken down by country, but we could, you can be sure that most of those were in the least risky markets in sub-Saharan Africa. So we want to talk about those that are perceived as more risky or harder to reach, right? So if I could just highlight a couple of examples. One from Liberia, where the access to electricity is about 30%. We have done some work on the regulatory side and on the business side. So first on the regulatory side, we've worked with the Liberian government and their Rural and Renewable Energy Agency and Electricity Regulatory Commission to work on standards for off-grid energy markets and products, duty and tax exemptions for off-grid solar projects, import ability of those products to reach the market. So that's one way we've worked with a government. And also there, we've been able to work with growing companies. So we've helped facilitate some 80,000 new off-grid connections, provided 24 companies with TA, technical assistance of some variety or another, and mobilized about $9.6 million for clean energy projects. We've also awarded 5 grants for companies to scale their business models, test their business models for the Liberian market, and to expand access to those markets. So overall, that's working for us there. But if we flip to Malawi, another a country where access to electricity is about 15%, 15%. We've worked with one of our Power Africa partners, the US African Development Foundation, to award an off-grid grant to off-grid solar company Green Impact Technologies for an initial catalytic grant of $100,000 to acquire and distribute solar home systems through an agent pay-as-you-go business model. So from there, Green Impact Technologies has gotten a subsequent grant also from USAID, and they've been able to grow their model there. So thanks to the grant funding, also critically important for these growing markets, they've been able to reach 15,000 households, and as well as 5,000 smallholder farmers with climate-smart agricultural technology. So this is the type of catalytic funding that we need more of, and that we need to link those with the funding to those markets. So no matter where the country is, I think it's no surprise that I think we all agree that everybody should enjoy the benefits of universal access to electricity and be able to navigate the energy transition. So thank you.
Yeah, excellent. Thanks for that, David. I think one of the main objectives, is how we can help to catalyze and mobilize private sector funding. And in that regard, I'll ask the next question to Bruce. Being a commercial bank, engaging in a whole new asset class of off-grid solar in frontier markets requires new understandings and new undertakings. The inherent risks associated with these new assets are often unknown. What are the driving force behind your decision to invest in the hardest to reach initiative, and how can we encourage more commercial players and such as Shinhan and others to join this objective of supporting the growth of access to energy for all? Thank you.
Shinhan Bank is the first bank who announced to be natural bank in Northeast Asia. Shinhan has grown so fast in Korea, and just our total asset exceeded 500 billion US dollars recently. The scope of our global business has been in Asia. Indeed, the Shinhan is the last foreign bank in Vietnam. But the growth rate of the Asian countries has been moderated, and the Shinhan's business model in Asia is becoming mature. So, global business takes time. So we need to find new market for our continuous growth. Africa is a continent with significant population growth, but Africa is still, far away for us and for Asian commercial investors. And perceived risk is too high. And they are not much reliable data. So branded finance structure, the case of the hardest rich, is very essential for us to make investment decision. And banks are heavily regulated. So for banks, having the capital protection could be more essential than just the promise of the high return. So, hardest rich give us, have broadened that, their branded finance structure, like hardest rich, have broadened our investment horizon and give us some of our exposure with 16 different African countries without risking our capital. So not much. Commercial banks in Asia have experienced this kind of de-risking mechanism, and especially for new asset or new country, new business. So I hope Shinhan can raise the awareness of this kind of de-risking mechanism for the other commercial investors.
Thank you, Bruce. Ron, in terms of Delight, Delight has been on a remarkable journey in enlightening and electrifying African homes and businesses. Could you tell us about your business model that has enabled you to provide access to energy for your customers, especially the underserved communities? Furthermore, could you share some insights gained from your experience in serving what we call the last mile customers?
Okay, thanks, Sergi. So if we look at Delight, and some of the stats have already been given out, we've impacted over 150 million people. For those who like exact numbers, it's 158 million as of today, and we've sold over 30 million products across the globe. Now, obviously, that started as a dream and a vision of our founders, and really, I'll just go back to what Jacqueline said. One of the first core ingredients was having people who believe, because you had an untested business model, an untested idea, and you need people who are going to step up and believe and have the faith that ultimately this will work out, because you prove it as you go along, all right? But maybe coming, more directly to the question on the Delight business model, I think the two things we focus on internally are access and affordability. Now, with access is, again, we talk about the off-grid sector. You normally are, dealing with the lower end of the market or bottom of the pyramid, hardest to reach. where, $1 is a significant amount for someone to make a decision. So you want to make sure that your product is accessible to them at all times. If they have to get onto a bus or 2 buses to buy your product, that can impact their buying decision. So we try and make sure, that our products are available at most within 10-kilometer radius of any community. The second is because we employ independent agents or commission agents to sell the products. They sell from within the community. So the product is available in the community, and that also provides employment within the community. All right. The last bit, which is always the big risk factor that people talk about when they want to invest, is around collections. But if your sales agent is in the community, they know who they've sold to. It also helps on the collection side. Then if I go to affordability, I mean, affordability is key. At the end of the day, and if I give examples, I mean, in the products that we sell, sort of the lower end, people are paying 18 US cents a day. The upper end, they're paying about 60 US cents a day. A difference of 5 cents a day is material for the people that we are, that we're serving. So you have to make sure that the affordability remains there. And that affordability goes all the way from the way you design the product, the way you distribute, so really having this very cost-conscious effort, and then also making sure that you are producing a product for need. It must be functional, it must be durable. No need for the bells and whistles, but it must meet the need, right? Now, you also asked around insights, and some of these insights, I think, when I joined this sector, I was quite surprised. You tend to find that when a home or a community has access to energy, I mean, the transformation that goes on. I mean, I know we sit here and we talk about transformation statistics, but the real impact and how deep it is. A child is now able to study until 8 or 9 at night. That can turn that entire family around, because they can now go through their education, they can go to university, an entire family is transformed. For people who run a small business, they are now able to work late or trade even longer. With some of our products, people even run businesses. All our products, for example, have sockets for mobile charging, and people run little businesses now. They charge people to charge their phones. So it becomes income generating. But I think one of the deepest insight, which sometimes I think we forget at these forums, is this energy or this light is such a core need for these people. It's like the air they breathe. And I know when people talk and we sit in boardrooms, we talk about credit risk and all of those things. But you tend to find, because it's so critical, the payment behavior with all these customers is actually very good, because you're giving them something that they all need every day.
Yeah. Thank you, Ron. I think in terms of the transformative aspect of providing access to power, is you couldn't put it in a more eloquent manner, and which takes me to my final question. For Jacqueline, the Acumen Fund has been engaged in powering Africa for almost 2 decades. You've been shaping the future of energy by championing pioneering initiatives that support energy access companies. A notable recent example is Hardest to Reach. Can you highlight the initiative's innovative aspects that make it particularly impactful in serving the underserved market?
Thanks, Soji. Listening to Bruce was actually really humbling in terms of the commitment and the expectations for how a commercial bank can engage with some of these countries where the electricity rate is 4 to 45%. And so just enormous thanks, and thank you for putting the pressure on as well. It's said by many that progress occurs at the speed of trust. And as I was listening to all of my colleagues speak, this is also about building certainly physical off-grid infrastructure, but so it is about building networks of trusted players that represent many different stakeholders, because it truly will take all of us to solve this problem. I want to point out my colleague Jiwoo Choi, who actually is the leader building the hardest to reach work, in case you're interested. But the initiative started with just trying to understand the problem. And when you look at the 700 million people with no access to electricity, you can really break it down. And our assessment in Power Africa has been fantastic in helping. About 550 million people will actually gain access to light and electricity through the markets that have been built. And some of the economies that Ram was talking about, that really leaves another 220 million or so people across 22 African countries where the electricity rates are between 4 and 45%. And so that became the target area, starting with 16 countries across Africa. We realized we couldn't even just do one single kind of investment vehicle, because there are, again, so many different stakeholders. You've got the larger companies like D-Light and B-Box and Sun King and BioLight, and then you have local distributors, some of whom might be here, who have much less capacity, and yet are operating in places where the larger companies won't go. They depend on those distributors. And so the initiative is divided into two different entities, if you will. A $50 million philanthropic, what we call market creation facility, which will allow the patient capital that Acumen knows how to do, allow us to make early stage equity investments or equity investments in companies that we clearly know need a different kind of capital in this moment so that they can actually move into very difficult markets. Including to the larger companies, where there are countries like Ethiopia and DRC that, while they have a 45% electrification rate, still represent almost 130 million people without electricity between them. So how do you provide those incentives? That market creation allows us to make long-term equity, debt, and grants to help prepare markets, enable companies to go in a way, operate like we did with D-Light 10, 15 years ago here in Kenya before it became the superstar. Side by side with that is a concessionary debt initiative, which has a blended capital structure truly made possible by Green Climate Fund, where we'll have the ability to make impact-driven loans so that if a company does start operating in one of these hardest to reach markets, and we're already operating in Benin and Sierra Leone with Solar Dow, with sorry Alex, with Easy Solar, and we're looking at other markets like Congo, Zambia. Once we can make a loan, if the company not only makes good on that loan and actually serves people, but if those individuals are truly living below the poverty line, which in the places that we're going, we don't think that will be such a big stretch, then we'll reduce the interest actually owed on the debt. So we start to align incentives and reward the companies for doing the right thing, using capital in a way that really allows it to be a means to an end that is about SDG 7. It's early days, so watch this space.
Excellent. Thank you very much for that. My final question, will be asked, the same question for all of you, but I'll start with yourself, Ron, and then, Bruce, and come all the way. So it's, what do you think are the key factors that are necessary to achieve the SDG Goal 7? Right?
Yeah. I think, when we look at, again, that universal access, it's really, going back to what Jacqueline was saying, is how do you reach that bottom 220 million? And, there's a few key pillars we need to look at. I think if we look at the, from the public side, for any of us operating in the off-grid sector, in this day and age, we still meet a lot of what I'd call bureaucratic or regulatory hurdles, whether it be taxes, customs, etc. And when you're trying to serve that very, bottom end of the market, and as I said earlier, a 5 cents difference makes a difference to whether that person can afford the unit or the access to energy. And I think, we need to continue to have that partnership on the public side. And I'm not to say that a lot hasn't happened. I think when you look at markets like East Africa, most of the products come in, largely VAT-free, tax-free, etc. But in some of these markets, I think we still need to develop those partnerships to ensure that, you're able to access those areas. The other side is always, at the end of the day, the financing and the funding. And I think Jacqueline has already spoken about this. It's about patient capital. Ultimately, I'm a strong believer in the off-grid sector. I do believe it's a sector that is sustainable and profitable, but at the end of the day, it does need some patience. It takes a lot of time for you to get the infrastructure on the ground going, the wheel to start turning. And what you need that patient capital that's going to go out and make sure that, you're able to prove the business case. And wherever possible, agencies like Power Africa, where they can provide the catalyst for grants, etc., that's always a boost for the sector.
Personally, I have some experience to have worked together with MDBs and ECA, Korean ECAs, and some of our public sectors. Whenever I hear about the public-private partnership, tipping point is what comes to in my mind. Actually, for new asset, new industry, new country, the tipping point, the government's role is very critical. And for example, public sector is the one who lay the ground for private sectors to come. And subsidy from the public sector could be good tool to bridge the demand and supply. And so anyway, we need to reach the tipping point. When the tipping point is reached, then the market function itself. I think we already saw a lot of things, a lot of the case, this kind of a tipping point successful story, especially, for example, solar energy sector. We already saw it. So I believe we should continue to work toward tipping point in energy access sector in Africa.
Thank you, Bruce. So Power Africa is a partnership, and each of our partners brings something different to the table, a different set of tools that we put together collectively. And so together, we've helped mobilize approximately $1.2 billion for the off-grid sector since we started 10 years ago. Now, our obligation is to understand what tools we need to reference at any one time, and I think that's what's needed for us to do more of. For example, what might work for a company like Yellow in Malawi, legal assistance, some initial grant funding, may be different than what is needed by BBOX in the DRC. And we need to recognize what each of our partners, what each market needs for it to grow, and for those companies to demonstrate the validity, the potential in those markets. And I think we collectively, all of us collectively, represent a much bigger toolbox with much more elaborate tools. And that's our collective responsibility, is to understand how to work the hammer together with the screwdriver, together with the surgical instruments, to provide the best solutions for those, not, yes, demonstrate in the easier markets, but also push the boundaries into the more perceived as more riskier markets. So that's our obligation. Thank you.
I don't think any of us could have said it better than you just said it, David. And so we're over time, and I'll just keep it very short. I think that in addition to what was just said, particularly around partnership and every one of us bringing different things to the table, is we need a mindset shift. We have the technical skills. We need to, number one, believe that SDG 7 is achievable, something I actually deeply believe, probably more than almost any one of the other SDGs. Once we decide that this is not only achievable, but it is a moral and productivity commitment, there is no reason we can't do this together. The fundamental word is together. We need new kinds of capital urgently, more capital, combined with the kind of assistance to support incredible entrepreneurs, to build networks, systems, to change their own countries so that people can change their own lives. But 16 years in, I am truly a believer, and it's just so wonderful to be on this journey with all of you. We're going to learn more than we ever knew.
Excellent. Thank you very much. We only have a few minutes left, literally 2 minutes, and I'd like to give an opportunity to, in the audience, to ask 1 or 2 questions. Thank you.
Thank you very much, everyone. As one of those in-country entrepreneurs in the renewable energy sector for over 15 years now, and we started as country distributors. We distributed D-Light even before you were funded by Acumen. They were then with Primlax. And then we went on to Fusera, Futuroson, and we did multi-products and all of that. One of the things that I've seen that actually brought the tipping point was when support came in the form of capital that was not taken back. And this is grants, right? So when the first time we made our major sales, we sold over 10,000 units in 6 months, was when the Solar Nigeria program happened by DFID. And DFID funded us at that time, I think, to the tune of 35,000 UK pounds. And that helped us move a lot of products. They were funding our marketing activities. They didn't fund the products. A lot of projects after that, what I find a lot of investors want to do is fund the product. And what we have seen in the sector is it is as expensive to get into these communities and sell these products as it is to buy the products. It's a beautiful thing to buy D-Light systems. I mean, at one time we tried manufacturing ourselves, but when we saw the improvements in Sun Kings and D-Lights and Fuseras, we thought it's better we just take the good products and sell them. But I think there's a disconnect between us and the manufacturers, and this is where I think most investors need to help us, both the distributors and the manufacturers, because we need to trust each other, because what we find is a lot of you go direct to the customers instead of working through us that have been working with you for years. And I think that is because we do not make the kind of numbers you want to see. And this was further helped with Nigerian Electrification Project of the World Bank, where we actually saw scale as well. So you will believe that what we need from funders who are commercial, right, maybe like the Acumens and all of that, is to actually look at us as well and feel, even though you have a 35% default rate, like Acumen told me one day, you can still be funded to do this project, and you can buy more from D-Lights and then sell more, and this will grow everybody's businesses. I'm Habiba Ali from Society.
I've been told that we only have a minute, Habiba. And I just want to quickly say that, unfortunately, Nigeria is not one of the hardest to reach markets in this initiative. However, what you're saying is true and right. And I think that's a bit what David was talking about before, and where this initiative is structured in two parts. If you go to a place like Zambia, you find local, often women-driven distributors that are undercapitalized, but really know their communities and want to build commercial enterprises, and should. And so and they've realized that the delights of the world have the manufacturing capabilities and product and brand to help them move. And so that is where the market creation side of this gives the opportunity to actually work with some of those distributors, not all, obviously, the ones that we believe have that capability to scale, so that those get built, even as you can also help the larger manufacturing companies go into markets they otherwise might not go. So really appreciate your point.
Yeah, thanks. I mean, as D-Light, we work with distributors in many markets. I mean, we've got distributors in over 50 countries across the world. So we are always very, very open to, working with distributors. I think, as you said, this is about building partnerships, relationships of trust. And if I go back to what I'd said, at the end of the day, for us to solve this problem, no one person can do it. And it's about making sure there's access. And if a local distributor provides the access, I see no reason why we cannot partner and we carve out markets or whatever it is and work together. But I think it's really, we can sit around a table, create the partnerships, create the trust. I don't think there's any barrier to that.
Thank you for that. We have a few more minutes, so there's an additional question. Thank you.
Thank you for the opportunity. I'm Melina Molo. I work for Newman Cafe Group. But having worked with an off-grid mini-grid, mini-grid, Kudura Power, I understand the work that Acumen and the team is doing to the people who are not connected to the national grid. However, in most cases, there is misunderstanding between access and connectivity. Even where the national grid is, there are people who are connected, but they're still not having access to the same utility. My question is, how can we make it viable for this team who are not connected through mini-grids by making the initial costs viable to them? For example, the small and mini enterprises, because the initial cost is very high, and even if you are giving them loans, it's something that they will have to pay back for. And sometimes they find this not viable for their businesses, and most investments see them as people who work in areas where there is national grid. My number 2 question is, research has made us understand that solar is one of the renewable energies that we can trust in now. But do we see history repeating itself, like when we or the previous generation really trusted the Industrial Revolution?
Yeah. I'll answer the first part of your question. And I think, when we look at energy access, we have to look at it in all the different layers, all the way starting, as you said, from the grid, who's got grid access, where is it viable to have a mini grid, and, then you get to where we play, which is truly off grid, right? And really, I think this is about matching the circumstances and the right product. So if you look at, the off-grid sector, the upfront investment that an entrepreneur or a business person would need is very limited to light their business. You're talking somewhere between $20 and $25. And then thereafter, there's a daily payment. So I think all those markets can be accessed by making sure that we just match the right product to the right person. And even though, we will concentrate our business in what are considered rural areas or truly off the grid, we do also still sell and access, even here in Nairobi, there are people who are buying solar home systems.
I had more time to think. Okay. It's two excellent questions. I think on your first question, the first question that was posed to the group was how the sector had changed over the last 5 to 7 years. And if I think about our perspective at Power Africa, we have had on-grid programs and an off-grid program. And we sort of saw them as different markets, different, almost, different sectors. And now we see them, the solutions for energy access being integrated. So one thing, as you mentioned, is to make sure that when we're looking at communities, we are identifying the right resources for that community, whether it's on-grid, mini-grid, off-grid, whatever. So, and making sure we're working with the right partners or groups of partners, right? On the second question, I mean, I don't have any great response except to say that trust is built over time, and we can only build trust by supporting, presenting great examples where communities have been served, where a just energy transition or just access to energy has been supported, and that we can celebrate that and learn from those models, trip a little bit, make mistakes, not be entirely risk averse, but continue to reach forward and build on those models. Thank you.
Yeah, I also really appreciated your questions. And the only thing I would add to David on the second one is that in many ways, the principles of the Industrial Revolution stand in counter to the principles of decentralized distributed power. The Industrial Revolution really depended on centralized power and not educating people except to serve in factories, to not think, frankly, to make widgets. This is about distributing power, not just in the form of electricity, but in the form of human endeavor. And that actually gives me great hope. And I agree with David that we build trust, and I think it's where we have to invest in storytelling as well and ensure there are these local distributors, Habiba, that are really building. But I think this is a moment where our bigger challenge is enabling local determination, distributed power, and yet still finding ways to connect all of us across shared values and understanding that we're truly in this together. So I see it slightly differently, but you've asked such an exciting question, I'm going to be thinking about it.
Thank you. I hope we were able to answer your questions, mostly anyway. I think that, apologies, we need to conclude. And I'd like to thank the panel, Jacqueline, David, Bruce, and Ron. And of course, I also like to thank you all. Many of you have come from far, and thanks for sharing some of your thoughts and your participation. More importantly, I'd also like to thank my colleagues who organized this: Daniel, Nestor, Eduardo, and of course Heijin, who was responsible for organizing this particular panel. In terms of the next panel, session, it's 2:50. Is it 2:50? It's in actually 8 minutes. So we can go back to the main hall for the plenary. Otherwise, thank you very much, and thanks for your attendance.